What's up, guys? Bang, bang. This week, there was a lot that happened in the Bitcoin and crypto industry. First up is Bitcoin itself has had one of the fastest starts to a year since 2013. The digital currency is up about 40%, and there's many reasons as to why. Some of the new investor interest is simply because people are trying to front-run the Federal Reserve's potential pivot back to loose monetary policy. On top of that, over the last 75 days or so, there has been an addition of over $500 billion on the top 10 central banks' balance sheet. And lastly, there's some investor interest coming from the debt limit, which was reached back in January. Investors are worried about a potential default, and therefore they want to find an asset that is outside of the US financial system. Regardless of the reason, 40% in the beginning of the year of appreciation to Bitcoin's price obviously signals that some new investors are looking at the digital asset. Now, of course, we have to look at the underlying fundamentals. Those fundamentals continue to look quite strong. I usually look at three different things when evaluating Bitcoin's health. The first is code execution. Is the code executing correctly? Is Bitcoin doing what it was designed to do? We can check that box. The second thing I usually look at is the smaller wallet addresses on chain. And what we can see there from an adoption standpoint is that any wallet address with 0.01, 0.1, or 1 Bitcoin, those continue to hit all-time highs. This means that people around the world are dollar cost averaging into Bitcoin, and they continue to accumulate regardless of price. Last but not least, I look at hash rate. And what we can see is since 2017, hash rate has exploded upwards. Even though there was many major crisis events, like when China banned Bitcoin mining within the country, and over 65% of those miners had to unplug their machines and move elsewhere. Still, Bitcoin's hash rate continues to move upwards, meaning that the asset and the network is getting stronger, more decentralized, and more secure. But now if we bring it to the most recent week, what we see is that there is a lot of movement. First, crypto winter is still here. Local Bitcoin's one of the longest standing crypto exchanges that allowed people to get Bitcoin in their local economy. That company is shutting down amid all the pressure from this long bear market. On top of that, Kraken, another crypto exchange, they settled with the SEC, paid a $30 million fine, and they're shutting down their staking as a service program. That is because the SEC is claiming that staking is the offering of an unregistered security. The day after Kraken settled, the SEC came out and said any firm offering staking as a service should come into compliance with the SEC. It remains to be seen how other companies in the industry will move forward, whether they will keep those services open or not. But we do see that there is a lot of regulatory pressure right now. We have seen over and over and over again, whether it is the SEC or other organizations, they want to have oversight over this industry, and they are forcing various companies to come into compliance with their rules and their regulations. So in summary, Bitcoin's off to a hot start to the year. The fundamentals still continue to look great. We see some companies shutting down because of the crypto winter, and regulation pressure continues to be ratcheted up, and companies are settling or trying to figure out what they're going to do with products. I hope that you enjoyed this update, and I will see everyone next week.